Okay. To begin with, we'll start with the, we'll just recap what we have done. Okay, we have started with the, definitions of what relevant ideas we need to understand the concept. So before that, there was one part which we missed out. That is, I have asked you people to, just visit those sites, okay, regarding the GSTN part. So coming to that, uh, yes. So regarding GSTN services, okay, basically the networking part. This part, I guess, we are left with to cover. So GSTN is basically your goods and service tax network. So what exactly basically this is going to specify you is that it's a common portal for everyone. Common portal for everyone is why? Because once you see that portal, you can see n number of services which is available to you. Not only of the services, what exactly the payment part or the expenses part or the security part or the ownership part is there, or how it functions. uh, it has been displayed into the website. Like the it's the no, the highlights are displayed over here. That is, it's a national information utility. That is, it says that everyone could access this part. Okay, everyone could have a look onto it. You can see the GST and ownership of the person. You can see it's the infrastructure, and it's basically a complex operation which they are taking place. The information which is provided here are secured. The payments and the expenses parts run very smoothly, and everything is disclosed to us. Okay. Further, what exactly the work of your GSTN is, it's basically it helps us for the registration. It will help us for making up the challans. It will help us to make up the appeals to someone. It will help us to, get out the returns which we are supposed to file. It will help us for the auditing purpose. And also, it is going to help us for paying out the refunds. So everyone has to visit these two sites, as earlier asked you people, and one need to understand the composition part. I mean, composition means the share part which is there. That is, it's basically a private company which is 51% is for the non-finance institutional, and the other 49% is owned by the central and the state. So the authorized capital for now is rupees 10 crore, that is US dollar 1.6 millions. The sharing of this particular authorized capital is as follows: that the central and state government is 24.5 each. HDFC Bank, ICICI Bank, NSC Strategic Investment Company owns 10% each, and LIC Housing Finance Limited owns 11% each, which is sum upping to 100%. Coming to the GPS, Suvidha providers, basically the GST Suvidha providers. Basically, it is the brains of your GSTN. And again, it's a private corporation which owns and manages this portal, whatever the portal we have seen over here. Okay, GSTN part. वो पोर्टल को हैंडल करने के लिए we have GST SPS, that is your GST Suvidha providers. So basically, what it is, it's basically a link between the taxpayers and the company or the government. So it is linkage to your taxpayers, which actually provides you the IT backup software, financial technologies. What exactly it owns? It's like there are 73 IT and ITs and financial technology companies. One commissioner is there of the commercial taxes right now. CCT, it is from Karnataka. Here, Infosys is appointed as your managed service provider. So he is looking into all of the services which is taken care of. What exactly the services are which is rendered by this Suvidha providers, or you can call it as the functions also. So basically, it helps us to manage the website. It's a front end services, like for example the registration part, the payment part, and the returns part. Also, this particular data is supposed to be forwarded to the central and state authorities. The work is also assigned to them. Also, your MIS reports is also provided to the authorities, that is your state and central. It also helps to perform the computations and the settlements of your IGST. It also helps to match the payment details with the banking network so that there are no deviations and one can file the tax accordingly. And the taxes are collected by the government correctly also. It also helps us to provide the analysis of the taxpayer's profile, as I said you now. And it also runs the matching engine, that is basically the reclaiming part or matching or any reversal part which is left out for claiming purpose of your ITC. Taking one step ahead, GSP may take help of the application service providers. Again, who is this person? He is basically a linkage between the taxpayer and the GSPs, the agents basically. And now the question is basically who is going to access all this data? Obviously, the owner itself is going to do it. That is your taxpayer. The another person who can hold is like now you have seen the GPS, ASP, MSP. These are what? These are basically your tax officials who have that jurisdiction to come up, and the audit authorities. So these three people are the main engines who can access the data. Now coming to the compensation says, as the word itself says, compensation. Compensation basically what? It's whenever there is a loss of something, you are getting payback about it. Similarly, the GST also has the criteria of it. Now, how this is going to benefit the people, those who have, got that loss, who has bear that loss just because of the implementation of GST. So to overcome that, to settle out that, the GST compensation cess has been has been started. So here are the some highlights of your GST. Uh, your GST compensation cess. That is, it's a cess which will be collected on the supply of your selected goods or services, or both, till sorry, or both till 1st July 2022. That is, the start implementation was your 1st July 2017. From there down the line, 5 years, whatever the losses are there, they have to come up. They have to you know say that to the government. Then and then only they this you know uh, or this loss can be compensated. Okay, and again it's on selected goods and services, and this is again to be considered to the GST council, where the decisions are going to be made regarding the compensation part. Now, uh, basically what it is, it will compensate the states for any revenue loss on account of implementation of your GST. And of course, it is levied on both the supplies. Both the supplies, that means what intrastate and the interstate supplies of goods or services, which provides compensation to the states for loss of revenue due to the implementation of your GST. And now this particular loss, how the proportionate part is there, like how much one could bear among the government. So it is shared equally by the government, that is with the state and with the central. Now, those person who has not, those person who have opted for the compensation levy, okay, will not be payable by those person who have opted for the compensation levy. Okay, the compensation part we will be covering further. It's not regarding the compensation cess. Okay, it's the another threshold limit which is there. The input tax credit of this cess can be can be only used to pay the compensation cess and not the other taxes like your CGST, SGST, UTGST, or IGST. What basically it is, letting you know that in case you're supposed to pay, some of the taxes, the negative amount, okay, of your CGST, then the compensation cess is not going to bear all of this. They will only bear the amount for which you have lost account. Okay. So the individual tax, the supplies liability will not be carried forward and considered as a loss for the state. So here are the highlights of the GST Compensation States Act of 2017, which highlights you regarding it is compensated to the states for the period of 5 years from the date of GST, which is came into force. And the compensation amount will be calculated with the base year of 2015 and 16, assuming 14% of the annual growth. Now here they have taken the base loss है but कितने time का loss? That also base part must be considered. So the base part over here they are considering from 2015-16. Now, which products are not to be considered as a base part? So alcohol for human consumption, certain petroleum products is not a part of your base year revenue. The scope which we have covered. Okay, that particular products are not considered for your compensation. Further, the state will be compensated at the end of every 2 months. GST compensation cess may be levied on your supply of certain goods and services as recommended by your GST councils. And in case there are chances whatever the fund has been available with the compensation cess, it may or may not be utilized. So, what if it is unutilized? And let's take first the positive example that it has been utilized completely. Then there will be no problem. What if the compensation part has been more than the fund which is available with them? So this won't be happening at all. Okay, because the records whatever they have received, accordingly, the funds were raised. Third part, in case if it is not utilized, then it is going to be shared in the ratio of 1:1. Like 50% of that will be shared between the states in proportion to the revenues of the states. how much the revenue, like for example, Maharashtra state is earning 10 lakhs, and the uh, Gujarat is earning say 20 lakhs. So 20, accordingly, this ratio will be utilized. And the rest remaining 50% of the part of the it will be used as the central divisible pool of your taxes, which will help for the services which is to be provided to the people. Now coming to the relevant definitions part, we have covered with the audit, business, then consideration, electronic commerce operator, India, taxable territory, taxable events, what are goods, services. Let's recap these two important definitions, and then we'll move on further. So coming to the important part, that is the taxable territory, is basically where your supplies should be made, which is again covering the India. And India is basically what covering every state, including your Jammu and Kashmir. And taxable event is where your taxes on supply of goods or services or both are uh, made by the taxable person, and there is taxable supplies in your taxable territory, then only this taxable event will be considered. Goods definition is basically what it includes your actionable claim, growing crops, grass and things which forms a part of land and which is agreed to be served before supply or under a contract of your supply. And it excludes your money and security. And it's basically a movable property. Considering the services part, services is basically everything which is, I said you the word intangible also, where the activity is relating to the use of money or its conversion for the consideration, like bank services, again facilitating or arranging the transactions in the securities. What it excludes your money, securities, and your goods. I gave you an example of the SIM card, if you remember. SIM card example, that is whenever you're purchasing a SIM card, it's a good, and when you're using it, you're recharging it, it becomes your services. You have covered person, a recipient, supplier, taxable person. Let's recap the taxable person so that you understand the further concept. Recipient is basically what a person who is going to pay that consideration, or maybe uh, who he or she will, is the person who accept that services or to whom this goods or services are been made available. And supplier is basically who is going to supply that particular goods or the services to the person. He may be an agent also. Now, in this case, who is your taxable person? Is basically a person who is registered or who is liable to be registered under section 22 or 24. That is your registration or the deemed to be registration process. Now, coming to the casual taxable person. Okay, now what exactly your casual taxable person is? Basically, who is going to occasionally undertake the transactions which involves your supply of goods or services or both. Okay, again, for what reason? For furtherance course of business, like to expand his business. Okay, he can act as a principal also, like usi ka business hai and he is coming and doing it, or he may be an agent also. So it can be done anywhere. There is no fixed place of business for your casual taxable person. Okay, he has the occasional part, and here the supplies are considered as the state or a union territory. Okay, now, like for example, over here you can see a person who is registered in Haryana and he is participating in the trade fair in Delhi. So he is called as a casual taxable person who will be registering for that particular time period in Delhi. Okay, like for example, if I tell you ki there is a mela, okay, in your city, and in that mela there are various people who is coming over there and selling their products. Okay, now this various people, they can be registered some people are coming from Gujarat, some are coming from Delhi, some are coming from Haryana, some are coming from Kerala. Everyone is coming, they have registered themselves in their states and they are coming and selling. Okay, now here also they are coming for the mela is for 10 days. For 10 days they are serving for the people. So this again, it's they are coming out of the box. Okay, and again there is no place of business also, no fixed place of business. They are going by state to state. So this persons are called as your casual taxable person. Now, there are also person who is all called as the non-resident taxable person. This is basically a person who occasionally undertakes your transactions regarding your supplies or maybe services or maybe both. He can act as a principal or he can act as an agent, okay, or any other relevant authority. But again, he is not having any fixed place of business, or and or he is not a resident of India, coming from outside, selling and going. It's the only part which he or she is doing, is the non-residential person. Now, coming towards the supply part, there are three types of supply. I'm right now not covering the supply part. We'll be covering in the furtherance course. That is where we will be understanding the levy and collection part. Now, understand the principal supplies. Okay, this principal supply is covered under section 2, subsection 108, which says that the supply of goods or services which constitutes the predominant element of a composite supply, and to which any other supply forming a part of that composite supply is ancillary. Taking an example, like selling a soap. Okay, only a single soap, which is of that product. Let's take an example of Dettol soap. Okay, so now this particular soap is the principal supply. Nothing extra or anything has been added to it. Only a simple soap is placed. So this is the principal supply. Okay, next is the composite supply. Composite supply is basically what? Where both are supposed to be supplied at a one shot only. Okay, like mobile phone with a charger. Okay, ये दोनों साथ में ही चलता है प्रोडक्ट. विदाउट दैट नो वन कैन गिव यू दैट प्रोडक्ट. हाँ, एक्सेप्शन वो आपके एप्पल फोन्स जो है, ओके, उनमें वो लोग अलग से सेल करते हैं. सो देयर प्रिंसिपल एजेंडा एंड मार्केटिंग पार्ट इज समवॉट डिफरेंट. बट टेकिंग इनटू आवर एग्जांपल, एक मोबाइल के साथ चार्जर, लैपटॉप के साथ चार्जर, नो, This combination, or you can say car and petrol, okay, where the things go together, is your composite supply, which is covered under section 2 subsection 30. It means a supply which is made by a taxable person to a recipient consisting of two or more taxable supplies of goods or services, or both, or any combination thereof, which are naturally blended and supplied in conjunction with each other in the ordinary course of business, one of which is the principal supply. If you have noticed, like when I'm purchasing a laptop, but uske saath we are getting the charger. So laptop is the principal supply and the charger is the composite supply, which additional no add-ons to. Like if you say that you are going to purchase a Santur soap, and that you get a pen. So this pen is the composite supply, which includes the principal supply. It's the supporting document, which you can say. Next is the mixed supply. Mixed supply is basically ना किसी का तालमेल, इसमें कुछ भी नहीं है, बट कॉम्बिनेशन में उन्होंने डाल दिया है. Like for example, you can say a a gift box. Okay, a gift box is the best example what you can say. Or the hampers which you give, the hampers you can take 2 3 supplies, and I mean 2 3 principal supplies also over here, like the chocolates. Then you can in chocolates also you can put a number of things. Or you can for it's again a basically a gift wrap which you give. Or you can see in the you know grocery shops, or you can go in the DMart or Big Bazaar or Reliance Mart or Geo Mart, whatever you say, wherever there is a combination जिसका कोई तालमेल है ही नहीं, this supplies are also there. Like rin powder के साथ they are giving some XYZ soap. So any combinations can be sold. Or you can see that rin bar can be sold also, rin powder can be sold separately, and that water bottle can be sold separately. So ऐसे combinations जो रहते हैं, that is called as your mixed supplies. It means two or more individual supplies of again covered under section 2 subsection 74, which means two or more individual supplies of goods or services, or any combination thereof, made in conjunction with each other by a taxable person for a single price, where such supply does not constitute a composite supply. Now you need to understand between the composite supply and the mixed supply. As I know a basic example, I mean the basic statement what I could say, that composite में principle included रहता है, and they are to be sold compulsorily sold together. And in mixed supply it's not necessary to sold it compulsory, an individual item can be sold. So let's recap about it. It's the composite supply consists of two or more taxable supplies, where mixed supplies consist of two or more individual supplies. Okay, sorry difference. Next, naturally blended in conjunction with each other, one of which is a principal supplies. And for the mixed supplies, it is not naturally blended, it is only supplied together. I mean, there is no purpose of, selling it. And then trade practice is to be bundled such items together. And in mixed supplies, there are no such trade practices which is there. in the composite supply, the charges, whatever are there, the tax is rate at your principal supplies, because and for the mixed supplies, taxes are rate at the applicable to the supplies with the highest rate of taxes, like रिन and वाटर बॉटल दे रहे हैं, तो ऑब्वियसली रिन पाउडर का प्राइस ज्यादा है, तो उसके ऊपर के हिसाब से आपको टैक्सेस पे करना पड़ता है. बट कंपोजिट सप्लाईज में, लाइक टेकिंग एन एग्जांपल ऑफ मोबाइल एंड चार्जर, चार्जर का तो कुछ है नहीं, सवाल ही नहीं उठता. बट पीपल गो फॉर द प्रिंसिपल सप्लाईज, दैट इज मोबाइल फोन के ऊपर you will be charged for as a tax. So again, the example over here, charges supplied along with the mobile phones, and for the mixed supply, a gift pack which comprises of your chocolates and sweets. What happened? So this were the three important supplies: principal supplies, composite supply, and the mixed supplies. Now coming to the taxable supplies. Okay, here you have seen taxable supplies and the individual supplies. So taxable supplies is basically what, where the taxes are supposed to be paid onto the on those goods and services, or both, which is to be supplied. Now in this also you have the types, like regular taxable supplies, or nil rated supplies, or the zero rated supplies. Now regular is basically where what, the rate which are more than 0% in India, like for example 5%, 18%. Okay, and nil rated is basically zero rated tax. By default, there are no rates onto the supplies. And zero rated supplies is basically your exports parts. Okay, exports is why the exports are having 0% taxes, because you know to promote the foreign currency, to promote the exports. Okay, to have that coverage all over the world. For that reason, the exports are considered under your zero rated supplies. So the supplies to your specific economic zone unit or your deemed exports, the GST associated with the items or services involved becomes zero, even though the same would attract to a GST which is greater than 0% when it is sold within your India. And here, this deemed as your zero rated supplies, because they are not to be considered over there. Next is your non-taxable supplies, which is covered under section 2 subsection 78, which means a supply of goods or services, or both, which is not liable to the tax under this act of, or maybe under IGST act, जिसके ऊपर taxes आपको पे नहीं करना पड़ता है. So non-taxable supplies are the exempt supplies and the non-GST supplies. Non-GST supplies matlab the products which I have mentioned you. That is your four products: alcohol for human consumption, real estate, tobacco, and petroleum products. Okay, these products are completely uh, except from the law. And what are the exempt supplies is basically for, these are called as the supplies. Okay, I mean the particular item is called as the supply, but it does not attract your GST. Like for example, agricultural products. Okay, these are what exempt supplies. So the supplies of the exempt goods or services does not attract your GST, even though they are within a purview of your GST, and a registered taxpayer cannot claim ITC on such imports which is used for making such supply. Coming forward to the done with the taxable and non-taxable, coming to the reverse charge mechanism. Now, to understand this reverse charge mechanism, you need to understand what is the normal charge mechanism. Okay, so there are three persons over here: your supplier, your receiver, or you can say the recipient, and the government. So, in this case, in the normal charge mechanism, what happens is your uh, uh, your purchaser, your recipient, purchases goods from the supplier. Okay, so he pays the amount along with the cost and the GST, both to this directly to the supplier, and here the supplier himself deposits the GST amount to the government. But in your reverse charge mechanism, you're again taking the scenario that the recipient is purchasing the goods from the supplier. He's paying only the goods price which is there. Like say example 10 rupees ka goods hai, and one is paying rupees 5 as the GST amount. So the recipient is going to pay only rupees 10 to the supplier, and the 5 rupees amount of your GST the recipient himself is going to deposit himself he is going to deposit to the government on behalf of the supplier. Okay, so this is all about the reverse charge mechanism. Now we'll just move on to the next part, that is the registration. Okay, now coming to the registration, uh just a minute, we'll share you this slide. So the first unit of your taxes, indirect taxes, has been covered. Now coming to the second unit, that is your registration under your GST. Now registration, why registration is important, or what are its specifications? We'll just check this. Uh, I guess you are in a position to see my screen. Hmm. Okay. So we are basically discussing about the registration. So what exactly this unit will deliver to you. Now, whatever the relevant definitions we have done it is for you to understand what the GST terms implies on. Okay. And now you will realize when we are discussing about the registration process or registration procedures part of it, the words which are being used like supplies, goods, the GSTN. So this all is covered over here now. Now learning outcomes. First you are going to learn about the procedure, then person who is not liable for your registration, compulsory registration, deemed registration. Then after the cancellation part or revocation part of your registration, the difference between them, the unique identification number of it, the registration number format, the types and periodicity of your GST return for your different taxpayers. The different taxpayers is basically what your regular ones, the composition ones, the casual taxable person, and your non resident taxable person. Now, understanding the nature or the concept of your registration, it's a GST PAN based and state specific registration part. And uh, no registration is done as a per state or union territory. One has to register, every state has to register it. And in case if your business is having a separate places of your businesses in number of states, like in Maharashtra also, in Punjab also, in Gujarat also, in Delhi also, then it's in every state the person is supposed to register themselves. And how one can identify it? One can identify using the GST identification number, which is also called as GSTIN. And it's a 15-digit number and a certificate of your registration, which is incorporated with your GSTIN. That is your GST identification number, which is extremely sorry. Yeah. So I was discussing the GSTIN number, that is your GST identification number, which is of your 15 digit. So this 15-digit number and the certificate is to be incorporated with your GSTIN, that is again your identification number, where it is made available for the applicant again in your GST common portal, that is your GSTN, that is your goods and service tax network. And in case your GST is not specific, okay, for the registration, that is your single registration for all the taxes, that is your CGST, SGST, UTGST, IGST, and your cesses. You don't have to register again and again. Once you are registered, you are been registered, and it is applicable for everything, whether you do your intrastate supply or whether you do your interstate supplies, or even you are opting for the compensation cess. Now, next part is basically who is liable for the registration. Before we proceed for the procedure, one should understand कि person liable पहले क्या होता है. Okay, a liable means they are bound to go it. Like they are the person who exceeds the threshold limit. Exceeding the threshold limit is the part where you would be understanding. Now, what exactly the limit part is? Again, we'll just pause that. Coming forward, in case there is a transfer of your business on account of any, expansion or succession, then the transferee is liable for the registration from the date of the succession or the expansion of your business. In case if there is an amalgamation or demerger by an order of high court or jurisdiction, then again the transferee is liable from the date on which your registrar of company issues the incorporation certificate, given in effect again an order by an high court or any jurisdiction party. Like in case if earlier you are having the company registered, they are compulsory liable for the registration. In case if there is an amalgamation, demerger, merger, or any expansion, the transferee himself is liable to get the new organization registered. And every new organization has to register. Now, as I told you, we need to understand the threshold limit. Now, what exactly the threshold limit is? It's basically the states, which are having the rupee, I mean, has which exceeds rupees 10 lakhs, which exceed rupees 10 lakhs of your supplies. Of your goods and services, or both. So there are four states: Manipur, Mizoram, Nagaland, and Tirupur. In case if the supplies limit goes beyond rupees 20 lakhs, again goods and services or maybe both, then Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry, and Telangana is also to be considered. This limit is for them. And in case the third limit, where the threshold limit of rupees 20 lakhs is more for both of your services and goods, then this is applicable. And if the threshold limit is more than 40 lakhs for the suppliers of goods where intra-state supplies are been there, inter के लिए 20 lakhs consideration. And again, the states which includes Jammu and Kashmir, Assam, Himachal Pradesh, and all other states which are there. So for few states there is a specification, and for few states there is a specification of rupees 10 lakhs, 20 lakhs, and 40 lakhs depending upon the situation. Okay.
So, ma'am,
Now
Maharashtra is me, ma'am.
is to be
Hello.
considered over here. Third.
Okay, third.
Yeah.
I'm not getting that point. 20 lakhs and 40 lakhs.
20 lakhs is for the interstate supplies and 40 lakhs is for the intrastate supplies. Both are for your goods and services. The 40 lakhs is only and only for the supplies of your goods, where there
Okay.
is an intrastate supplies. Now, this particular threshold limit is to be considered when there is an aggregate turnover. Now, what is aggregate turnover? It's basically the amount which is used to calculate the turnover of a company or the organization. So, what exactly it is supposed to be included? So, it includes your taxable supplies, it includes your exempt supplies, it includes your exports, and it includes your interstate supplies. And summing up all of this, you get that particular amount which is named as your aggregate turnover. And from this aggregate turnover, the threshold limit is to be compared. Like, for example, if your threshold, I mean, your aggregate turnover is rupees 30 lakhs, okay, and there is, a person is selling from Mumbai to, let's say, Delhi. Okay, so here there is an intrastate supplies 30 lakhs. So 20 lakhs wala limit will be applicable. If considering an example from Mumbai to Pune and the goods are been supplied and the turnover is 50 lakhs, then the threshold limit will be considered as rupees 40 lakhs. Taking an example, if 15 lakh, and again whatever the example I have given, all is supposed to be registered. Considering an example from Mumbai to Meghalaya, the goods are been sold of rupees 10 lakhs. Now Meghalaya is coming under the limit of 20 lakhs, correct? So here the registration won't be applicable for him. If the turnover for from Mumbai to Meghalaya is, let's say example, 21 lakhs, falling into the limit of 20 lakhs, he will Meghalaya will be applicable for the registration. Same goes for here also. Like if the services are rendered, okay, from Delhi to Tripura of rupees 5 lakhs. Now the threshold limit over here is how much? 10 lakhs. So again, it won't be liable for the registration. If from Delhi the services are rendered for rupees 11 or 12 lakhs, say example, then again in this case, Tripura will be liable for the registration. I hope you people are getting this. And what is basically your aggregate turnover? You can use this shortcut. The taxable supplies, exempt supplies, exports, and interstate supplies. Very important. Interstate supplies. Okay. What not to be considered is the value of inward supplies is not at all to be considered. And this aggregate turnover is computed on all India basis for your same PAN. Every time you need to make sure that you are not supposed to include your CGST amount, your SGST amount, or maybe UTGST amount or IGST amount. No compensation cess or any inward values or inward supplies which is there or which is payable under your reverse charge mechanism. So now let's take an example and understand how aggregate turnover is to be calculated. I will just share you the screen. I mean the Excel sheet. I hope that everyone could see this. Now, considering an example, we are supposed to calculate the aggregate turnover of Mrs. Bhagesh. The details are given below for to us. Now, understand. Now, this is your taxable supplies, which includes your GST. Okay. Then we have exempt supplies. We have export of goods. We have export of services. We have inward supplies on which your tax is payable under your reverse charge mechanism. We have cess, and we have interstate supplies, which excludes your GST. Okay. Now, the first case, taxable supplies, we are supposed to be considered for your aggregate turnover. Okay, so now we will be considering this. Next, we have your exempt supplies. Exempt supplies are also to be considered. We have exports. We also consider these exports, exports of goods as well as your services. We do not consider your inward supplies. We do not consider the cess. We consider our interstate supplies. Okay, so this all we are going to consider the amounts which is there for your aggregate turnover. But remember this, what I have said, we are not supposed to include your GST amount. Correct? Now, in the first case, you have seen the GST, these are your taxable supplies, which includes your GST. Now, you're supposed to exclude this. Now, the amount is how much? 44800. I mean 000. This amount is including your GST. That means this amount is considered with the GST. That is your 100 plus your 12%, which amounts to rupees 112. Okay, considering the percentage. Now we want the 100% value. So cross multiply and tell me what will be the answer. It's 4 lakh.
Yes, ma'am. 4 lakh.
Obviously, I've calculated it. You to calculate by yourself. So
Yes, I have
here,
also done the calculation.
okay, fine. So here the amount comes to 4 lakh. Now, here in other cases like exempt supplies, export goods, you have not any notifications whether the taxes are included or not. So you will be considering the same amount over here. Now, the last case, that is your interstate supplies, which excludes your GST. Now, this amount is already excluded, so you can consider the same amount over here. And the other over here, I have just, put it 0 so that, it becomes easy. And you sum up all of this, you will get an amount. That amount is called as your aggregate turnover. Just calculate it whether you're getting the same. So
Ma'am,
every time,
such
whenever you're
sums are there in
calculating the
exam.
aggregate turnover, sorry, I couldn't hear you, Ishika. Can you pardon?
Such sums are there in exam.
No,
Okay.
it's just the calculation in case if it is asked in the objective type of question, maybe.
Okay, fine. Okay.
Yeah. Well, the sums which are there is based upon the third unit. Okay, the valuation and the calculations of your taxes. This
Okay.
I'm making you understand what is to be included.
Okay.
This may be asked in your objective type of questions, which carries 1 or 2 marks. I hope the concept of aggregate turnover has been understood by you. Fine. So, in the coming lecture, we will be understanding the procedure of it and the person who are liable for the registration and not liable for the. I mean, today we have completed with the liable part. Now, compulsory registration and deemed registration and the procedure is left. Okay. So, that will be covering in your next class. So, till then, take care, everyone. Bye.
Bye, ma'am. Thank you.
Yeah, welcome.